Good evening. Welcome to Equityaxis News, your home for your financial insights and real-time stock quotes. I'm Sandra. Let's get to business. Cable manufacturer Cafca has released its trading update for the third quarter ended 30 June 2019. The company recorded a decrease of 8% in sales volumes compared to the same quarter last year. This decline was attributed to a drop in the local demand, which came following failing monetary policies. The company also said the inconsistent power supply makes it hard to penetrate the market or predict the future of the cable market. Despite falling demand, the company reported a positive performance on the export sales volume. Year-to-date exports by volume increased by 115% to 10.3% from the previous sales of 4.8% recorded in the prior year. Minister of Finance Mthuli Ncube has established a 9-member monetary policy committee as part of measures to help bring credibility to policy as the economy pushes towards its own currency. According to the finance minister, the committee will benchmark interest rates and begin inflation targeting. Among the committee members are RBZ Governor John Mangujga, who will chair the MPC, and his two deputies, Jasmine Chipika and Kupikile Mlambo. One of the MPC's big tasks will be steering monetary policy towards the full reintroduction of the Zimbabwean currency, which the minister said could be printed as soon as this year. President Mnangagwa, at a public event in August in Harare, said Zimbabwe aimed to start printing new notes for circulation by the end of 2019. Mnangagwa said he believes a local currency will help make the Zimbabwean market and industry more competitive. However, the trend on the local market shows that confidence remains the greatest threat to any new currency and the biggest job the MPCs might face. The sharp fall in the local currency's value since February has led to inflation, and the currency measures have eroded in value, and the value of investments of the Zimbabwean Stock Exchange, which is now valued at around $1.5 billion from the equivalent of $4.75 billion in June. Zimbabwe State-owned Minerals Marketing Corporation opened a 316,000 carat diamond auction, which will close at the end of the week. This is the third auction in 2019, and it will close on the 13th of September this week. Minerals Marketing Corporation General Manager Tongai Muzenda has disclosed that the auction has attracted buying interest from Belgium, Dubai, India, Israel, and South Africa. Zimbabwe expects to produce 4.1 million carats of diamonds this year, up from 2.8 carats produced in 2018. Cabinet yesterday approved a $51 million facility to be financed by John Deere for the supply of agricultural mechanization equipment. Apart from approving the facility, the cabinet also agreed on various strategies to improve the productivity during the summer cropping season. The facility will involve the supply of agricultural mechanization equipment so as to increase agricultural productivity and viability. This was said by the Information, Publicity and Broadcasting Services Minister Monica Mchangwa while presenting at the post-cabinet briefing yesterday. The equipment to be imported under the scheme includes 80 combined harvesters, 1,300 tractors, 200 disc harrows, 400 planters, 200 seed drills, 100 broom sprayers, 100 tipping trailers, and fast-moving spare parts for each of the equipment and machinery. Minister Muchango said the facility will offer loans of between 3 to 5 years for participating farmers and will boost the government's farm mechanization program. Minister Muchango also added that the duty-free importation of fertilizers and seed was open to any farmer with free funds to import the commodities. Thank you for watching. This concludes our evening news, and up next is our Markets Daily. Catch us next as event produces and goes further in the markets. Thank you for watching. Good evening.
climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Good evening and welcome to Markets Daily. Let's have a look at what transpired on the Zimbabwe Stock Exchange. The ZSE Mining's Index maintaining a constant at 262.50 points. The Industrials Index inched 0.21% to 543.13 points, while the All Share Index inched 0.20% upward to 163.27 points. The ZSE Top 10 also gained 0.15% to 144.94 points. On a week-to-date basis, the All Share Index is down 0.67%. The ZSE Industrials is also down by similar margin, 0.63%. Mining's Index down on a week-to-date basis by 2.05%, while the ZSE Top 10 is down 1.30%. Now on to the top 10, where we have seen an interesting, almost balanced trend with Econet losing 0.44%, Cassava, Insco, Panenga, Sitco, all in that bracket of losers. And then on the gainers, only one counter on the Zimbabwe stock on the top 10 counters actually gained mileage by 2.98%, which is Old Mutual, to 1.956.43 cents in that regard. Sitco, International, BAT, as well as National Foods have pretty much remained in a static position. Ariston being the biggest riser of the day, gaining 19.88%, quite an interesting gain there. Old Mutual at 2.98%, but Ariston, these are exporters. They are into agriculture and have quite an exporting line of business with quite a footprint on various international markets. So with the way that things are playing out in the economy, there would be, of course, that sentiment on the part of the investor to invest in export-oriented business. You'd find that trend also. TSL has also gained a good 0.95% to 74 cents in that regard. Then OK Zimbabwe gaining 0.43% to 32.50 cents. Old Mutual there continues to rise on an everyday basis. Then Mikos gaining 0.33% to 114 cents. Our biggest loser of the day was PPC, losing 2.26% to 205 cents. This could be the reflection of the depressed demand that you find in the economy, with high levels of inflation coming in at 175% in the month of June, 230% in the month of July. We of course were able to deduce that particular figure for the inflation for July based on the information provided by ZimStats. Simbisa also losing 0.85% to 58 cents. Sitco in the same bracket at losing 0.69%. But of interest there would be, of course, the depressed demand for Simbisa. As things are playing out as they are in the economy, there would be concerns that investors would be perhaps looking at. The Zimbabwean dollar continues to lose value, coming in at $11.99 against the US dollar on the interbank market system, while on the parallel market it closed at $14.07 against the US dollar, while on the Old Mutual implied rate at $14 against the United States dollar. But what we're actually seeing there is a lack of confidence in the regime of economic policies that government has launched through Treasury as well as through the central bank. We saw just 2 days back the Minister of Finance setting up a monetary policy committee, which could be an attempt on the part of government to actually reinstate or relaunch public confidence in the local regime of economic policies that we have in the country. So it remains to be seen really where the market is going. I mean, we've seen the Zim dollar lose more than 300% since the launch of the interbank market system. Some have said there could be convergence, particularly government has spoken about convergence, but the trends don't seem to be reflecting any form of convergence, while there's also been an argument that it is not so much about the convergence, but pretty much there is importance where the stability of the market is concerned. As it stands, we're not seeing any stability whatsoever. We continue to see the Zim dollar losing value against the major currencies of the world. Now this concludes our news segment for tonight. Thank you for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website www.equityaxis.net. From the Equityaxis team and I, Danky, and ciao!